Welcome back. Treasury Secretary Scott Bessent and the Commerce Secretary Howard Lutnick are out meeting with Chinese officials in London today to try to defuse the trade tensions, which escalated from tariffs to a dispute over rare earths recently. Big problem for the auto sector. So let's talk about what signs of progress we may or may not have that could come out of it. Michael O'Hanlon is Director of Research for the Foreign Policy Program at Brookings. So glad, Michael, you could join us again. Anything to read into this yet? What about the duration of this? We're hours into it.
Yeah, it's a great question. I don't have any read. I mean, this is a pretty interesting set of talks. This is not just the usual, do we do another, 30-day delay or change the rate by 10%. This is the economic relationship that has such strategic implications for everything from the future of the technology race to military competition. And both sides have big asks of each other and big needs on each other. We need China's rare earth minerals, not to mention all the consumer goods that keep our inflation rates low. And China needs Western technology for building chips, needs Western consumers. And Trump, of course, has promised a reshaping of U.S. manufacturing. That's only going to happen if he does something reasonably big vis-a-vis China. So that makes you think he probably doesn't want a quick and easy deal. But on the other hand, we see these, the American acute need for rare earth metals and magnets that you referred to. And we know that Trump's concerned about risk of a recession, about the stock market. So he's got a real moment of truth, not to mention Xi Jinping and all their negotiators. I don't have a forecast for that reason. There are really powerful forces saying they should do a deal, but there are really powerful forces saying they shouldn't. And I don't know which they're going to choose. I
thought we were more on the track of a real overhaul back in March and April. Now it seems like not so much. I mean, this is actually an interesting paragraph. The Ling Wang over at the Journal had a great story on this today. And it basically sounds like the U.S. continuing to walk back some of its recent impositions. Stuff that we didn't really know about with this granularity. Recent U.S. restrictions, she said, that were never publicly announced by the administration include jet engines and related parts China struggles with, software that the Chinese need to produce chips, and ethane, a component of natural gas important in manufacturing plastics. Like, we haven't really talked about those with a lot of specificity. We've talked about some of the chip stuff. But so the administration really tried to take a hard line on these key industries, and it sounds like, according to this report, is now willing to kind of relent on that front.
Yeah, we're not really in a position to go eyeball to eyeball with China in terms of near-term cutoff of key goods. We can do all sorts of things to reshape the longer-term competition with, some of the things the Biden administration and the Congress wanted to do with the CHIPS Act, for example. We're trying to increase over time our ability to process rare earth minerals here in the United States. But we depend on China for so much in the short term, and we haven't even talked about pharmaceuticals. So many life-saving American medicines have their primary pharmaceutical ingredient or some other key element sourced out of China. And so we can't afford to get to a point where we're literally cutting things off with China and thinking we're going to prevail. We don't have that kind of brinkmanship, showdown ability vis-a-vis the People's Republic. So, I think in that sense, hopefully both sides will realize they need each other. And they might want to reshape long-term trends, but they can't just cut things off in a dramatic way right now.